Okay, so the US labor market isn't quite as strong as we thought. So maybe you'd expect stocks to fall on that news. Instead, US markets finished the week near all-time highs. The Dow closed 176 points higher, the S&P 500 rose 0.5%, and the Nasdaq gained more than 1%. Why? Well, traders believe the poor job numbers make it less likely that the Fed raises rates. And traders like that. Next week's inflation data will be another critical piece of this puzzle. Now, Diane Swonk is the chief economist at KPMG. She joins me from Chicago. So, Diane, we had David just talk us through the numbers. Can you talk us through what you think this is showing? I mean, they say 1 month doesn't make a trend, but David showed us a trend.
Yeah, actually, we've seen a big slowdown in job growth over the last 2 years. Last year, we only saw 15,000 jobs created a month. This year, it's been year to date 61,000 jobs. But in a low fire, low hire environment that we're in, that is more than enough to bring down the unemployment rate because the supply of workers, as we already noted, is constrained. People are dropping out of the labor force. Foreign-born workers tend to participate at a higher rate than native-born workers, and we're losing foreign-born workers. In fact, we hit another cliff in the month of July and saw some early firings in response to the temporary protected status of Haitian workers. The bulk of them actually had to roll off the payrolls by the end of July. Some firms, there was uncertainty, were laying them off as late as late June, so they would have shown up in some of that weakness. And in fact, in the healthcare numbers, the places where we saw the weakness was in social assistance. That's in-home care, daycare, elderly care, nursing home care. Those are areas that tend to be filled more by immigrant workers. And so losing that supply has had an impact. We did see the slowdown in wage gains, but what we need to really see for the Fed not to be worried about inflation is those inflation numbers next week. And is this a more persistent inflation situation? What we saw in the ISM and the PMI, these surveys on both manufacturing sector and on the service sector, showing that they both are not only still growing, although the hiring was mixed in them, but inflation was remarkably hot in those numbers. And so that's going to be something that will ultimately determine whether or not the Fed has to hike or not. I think that probably we're going to see more momentum in inflation. We are now over 5 years in, and we're getting a muscle memory. Inflation is becoming the norm instead of the anomaly, even as the labor market cools a bit. We also did see some good news in the numbers. The number of people who are long-term unemployed actually dropped, and the number of unemployed actually dropped, even though we lost the supply of workers as well, bringing that unemployment rate down to 4.1%.
And is there anything else going on here? I mean, are we talking Iran war, tariffs, energy prices? Presumably all that's factoring in here.
Absolutely. Yeah. Actually, we also know that vacations during the month of July were their second lowest on record. People out on vacation, that was in the household survey. That is in response to higher prices at the gas pump that picked up again in the month of July. And outside of host cities, the World Cup didn't play a very big role. The travel industry has been very concerned about that. We have this sort of donut economy where, the middle, lower income and middle income households are really quite squeezed by the cumulative effects of inflation, while the top 20% continue to spend almost with abandon. And that is also holding up inflation and gets to the issue of why we've not had overall wage gains of any magnitude adjusted for inflation since August of 2021, except for 2 months. That really is pretty stunning period, even as consumption has picked up. That is really important. Not only have we drained savings and the stimulus that we got from the pandemic, we had additional stimulus in the second quarter too, but also wealth effects are playing an outsized role with those higher income households and wealthiest households really carrying more of the overall economy. They're also more resistant to rate hikes when they come through.
Diane Swonk, thanks so much for your time. Appreciate it.